So hey guys, we're here for one of the first fireside chats for the Emanda platform, and we're here today with Sid from Pop Business, and talking about some of the partnership that we have together, and talking about what we do with respective clients and customers in the platform as well. And we're going to have a good chat, a fireside chat, quite literally with the fire. That relatively looks real. This is great in Sydney to have this, and be just chatting a little bit about what we see in the clients and what you see in your clients around some of the things that are really important to them and how you help them, especially around their business in general, but pretty around advisory and understanding the growth and structure of the business as well. So thank you so much for jumping on.
Yeah, thank you, Pete and Emanda Ventures for having me today. Looking forward to having a great chat on advisory, accounting, why Pop Business exists. We started this business in 2018, and coming up through the ranks in a top-tier accounting firm, we just saw that clients, a lot of the problems were around communication with their accountants, not just being able to get in touch with them, being too reactive, not thinking about the future, just looking back in the past. And so Pop, we created proactive, organized, personalized accounting services. It does. We wanted something catchy and something short, sweet. So Pop was created, and we help small businesses to medium-sized businesses with proactive accounting services. But what we excel in is really protecting assets, being tax efficient, and having that flexibility to actually achieve your financial goals. So we don't just look at the past, we look at the future.
Nice, it's really good. It's quite in line exactly with what we're trying to do at Emanda as well, and even on the platform. And that sounds really good. I think that's really important. We'll jump straight in there around what looks good. Sorry, it's probably a bad way to say it, but when a client comes to you to start looking at what's some of the things that stand out about them straight away, we can kind of smell or understand that they don't look so healthy. And what are some of the things that you look at and go, actually, they're doing well? What's some of the key things straight away that you look at when you get looking at them?
So when a brand new client comes in, we obviously love to look at their structure. And if it's a business owner that's been growing the business for 2-3 years, most of the time you see them having a sole shareholder, sole directorship kind of structure. And that works well at the beginning because costs and administrative costs to run it are relatively small. But now it's no longer working in their favor. Now all the profits are being distributed to one person. They're paying the top marginal tax rate, and it's just not effective. And that's where we come in and look at how can we move assets and income around to get a better outcome cash flow wise.
And well, cash is king. You're not wrong. We always have conversations with people. I had one the other day, just talking to someone finding out about their structure, and we're going through that, and we're talking about he's got his particular thing you see, he's got his wife, and she's in the business, and she does that work in the business, and I go, cool, how do you pay? He goes, we just pay ourselves salaries. I'm like, why are you doing that? And he goes, that's how you do it.
And at what amount are you paying yourself?
That's right. And then the issues is, well, they just don't, I guess sometimes a lot of times they don't know. That's what you're saying. You're just looking to go, but they don't know.
And that's fine. Absolutely.
And then I think the other part, whenever we chat to people as well, look, they don't know, and they go, but what does it matter? I think that's the key part, is even you said early days, good. Then when you show them a difference, even 10 grand, 20 grand difference in their pocket, they're like, no one told me this. So it's always the after effect that they see it.
And I love that, to create that impact, because it does make a huge difference. And that's why we go to work every day, because we love those outcomes. So the structuring side, we work heavily in, and making sure that does it make sense to start introducing different entities into the mix. Family trusts, what kind of trustee do you have, individual versus corporate trustee, market companies. Because the way we look at it, there's 3 main worlds for our clients. You've got the business world, so if it's turning a profit, then happy days. But are you looking after your personal world as well, your family, your personal investments and assets, and then your financial world, where you're building true wealth, like property, assets, and portfolios. So we like to look at those 3 to see how to really get the best outcome.
That's really good. I think, so you touched on something there as well. Actually, going right back to what you said before, I think one of the key things, when we get asked all the time about referrals for accountants, so often now, so funny. And we always wondered why, because they have an accountant. So it's like, why? I would say 99% of the time it's because I can't get in touch with my accountant, or they just don't speak to me. Like that's the key thing, is just people like, I just want to talk to them. So one thing is that obviously the communication is key. But I'll ask it in two parts. One, how do you stay in touch with your clients? What sort of regime do you put in place? And also, how, like some of those things you were just mentioning, how do you extend? Do you track them with them? How do you keep the finger on the pulse?
So I always extend an open line to my clients. I make it very clear you can contact me whenever, because I think in the early stages of my career, it's really transactional, but really you're dealing with people at the end of the day. Real lives, and they want to be guided. They want that connection. They want that advice, and that's why whenever I speak to a client, send me a message anytime, because then I can triage it to my team, to the right people within the team, to manage that task. But of course, quarterly, because with the ATO tax regime, we've got quarterly advisors. So those are usually the trigger points that we get in touch with our clients. Hey, well, the March quarter's just finished. Make sure that your numbers are up to date. If you need help, just get in touch. But that's just the financial hygiene side. When it comes to advisory, they usually have a particular issue that's coming up, thinking about selling the business or thinking about hiring someone. It's now the right time. So that's when the conversation isn't about the numbers, it becomes qualitative as well.
And so cash flow is a key one.
Mm-hmm.
We forget as well, what sort of size business actually do you work with? As small as and as big as?
So we cut our teeth in the first few years on small businesses, sole traders. So we had a lot of experience moving from sole trader to company, or company to multi-entity groups. But now we focus, but we are working a lot more with complex entity structures. So businesses doing 2 mil plus. Our biggest client is doing 50 mil. They have some international dealings as well. So we're working with transfer pricing, general purpose financial statements, international dealing schedules. So now we've started to add capabilities that we didn't have before, which is great.
So we were talking a little bit earlier, actually, just before we started by Beautiful Fire, which is around sort of different services and stuff that you do for clients. Every accounting, every firm in general is always a little bit different. Mm-hmm. Obviously, you work with the overall tax position, compliance, all the things to talk to about ASIC and that sort of stuff. But you also mentioned you will do valuations for them. You'll be able to. Do you help them with an exit if they ever go through that as well?
So to have a successful outcome, all business owners need a star team around them. So having the right data, having the right platforms like Emanda, and then also having the right accountant in their corner, legal side, which we like to bring everything together. So where we play our part is going to be the valuation, the timing of the sale as well.
Very good point.
And where you are in relation to the financial. And then we help look at how do we get paid, how does the client get paid from that transaction tax effectively. So we look at all the CGT, small business tax concessions that may apply, and just help them through that process.
That's really good. You mentioned something interesting there is around advisors working together, the teams working together.
Sure.
Where do you see them working today? Sorry, a little bit of a picture, or how do I say this for ourselves? But one of the reasons we built into Amanda platform around your advisor in your pocket is putting all the advisors in your pocket is the idea, right? So accounting, interaction with the zero, all that sort of stuff, great. We just talked about before about the advisories and the financial side, the VCFO, they jump in. Often we tell people on the platform, go and add your CFO as well, put some work on it. The interesting part then is also the lawyers. I asked the question knowing myself that it's often done via email, but I'm interested in yourself. Where do you normally find everyone chat during that process, or is it all email?
Sometimes they don't even chat, which is quite insane. I was talking to a client the other day, because we're helping a lot with building property portfolios in the right structures as well. And one of the biggest pain points for them was the broker wasn't talking to the accountant, and so now they've got the wrong structure and it's not working in their favor.
No, they really have to talk.
That's right. And I think having a platform like Emanda helps having that data in one place to just enhance how quick we can exchange information and communicate the strategy.
And the same invitation, I think, is a key one as well. A lot of the times we see things flow and everyone's like, absolutely, we work together. Like even the broker or someone running the deal, and they're like, yep. And the accountant goes, well, I don't know where you've got those financials. Special purpose tax. So there's general purpose books being done. What? So you have to go by those.
Let's look at the general purpose.
They just don't talk.
And a lot of people, a lot of business owners, and it's a common situation where you don't know until the right advisor says, we should really be doing general purpose for this. And then making sure that they understand what the numbers truly mean to get to that valuation.
And not everyone requests it. That's the other part as well. Depending on the size of the deal and everything else like that, it's a lot of times people just like completely overcomplicate the situation. Our whole point coming into the world was, after going through so many other bits, how do we simplify that process? How do we demystify the overall sort of game. I think one of the things is, okay, so we talk about that, don't get me wrong, that's at the end. Preparing for, not so much preparing for the exit, but preparing companies at the very beginning, just in terms of so they get to the end. Do you have that conversation with them around, do you do an education piece on, we want to be set up this way in case you ever do look to exit?
We've started to have those conversations because when you get into business, sometimes you don't really think about the end. But when the advisor first posits the question, let me actually think about it. Is it 5 years? Is it 10 years? Do I want to be a unicorn? Or do I want to just have
Cash
a
flow.
stable business that sustain my family? And both, the whole range is completely acceptable, but you have to have the idea in mind. So once we do have that conversation, and maybe it's a 5-year exit, what are things that affect the business valuation, key man risks, right? If you need to be involved in the day-to-day, it's going to be very hard to get out of that business.
That's actually very important as well. You're in it. That means it's like it's under management, isn't you have to be there. It means if you go, someone else that come in, they're going to pay for that. And just having that conversation about how they want to go is really important. It says, would you stay in there? It often is only really figured out at the end. But I think preparing for making sure that you have the options at the end is probably the important part.
So an investor would look at the business, what are the risks, what are the opportunities, how's it structured, how strong are the financials, is it consistent, is there a future as well? Because the past is one part, but what's the retention rates, what's the customer lifetime value? And finding that those pieces of information can be difficult if you don't have the right systems.
It's one is finding it, the other one is then actually helping them track through. So we do that with the platform we trade to make sure that outside of all just the financial parts, everything else that kind of pertains to a business, we just want to track it through. People are always like, oh, like what sort of numbers? I'm like, things that don't even necessarily affect the business value, but things like, for instance, are you tracking the number of leads that you're a lot of people do this modeling, right? They'll go to Sphere. You really need to make sure that you're closing 2 deals a month. Great. And then it's like, so that means you need to be having 50 conversations a month. What? Right. That's the hit rate. That's where you're at. And so that conversion rates, all those sorts of things is more going into the business when you do it that way, which is really good. So look, I think that's important. One thing you mentioned just before was around the investment side. So do you help your clients if they're going for investments? Is it again more about making sure they're structured correctly and have the information?
Well, we have a discussion whether capital or debt makes sense. Firstly, if it's a seasonal issue, then perhaps just a short-term credit line to help smooth out those cash flows makes sense. But if they're looking for growth, that's usually where the capital conversation comes in. You could go private, angel. So we just talk to our connections and network to find the right kind of investor for what they're looking for. Because there's tech, there's retail, there's franchise, so many different.
And each one of them has got their own specialty area. It's just so it's good. It's good. So I'm going to guess that the guys at Pop have got a good network of I can introduce the people in the right spot in the industry, which is good.
And something that's coming into play, a more recent deal was around crowdfunding. Crowdfunding usually works well when there's a good narrative, there's a community built behind that want to support the business. And then so one of the deals was like they raised 500K, 1,000 investors, just putting a few $100s here and there because they wanted to support the mission of that business. It's really cool.
Yeah, that's really good. We've seen and we've actually got a lot of clients ourselves actually have done the crowdfunding sourcing that way. That's good. I think what I was going to ask, and probably also because people will come watch as well, what's your ideal, I know I always get this question, what's your ideal client? Who do you think is best?
I think it's more of a mindset. We love owners that really do have that perspective of business, investments, and personal. Because all three of these have to interact to actually achieve an outcome. If the business isn't doing well, it's very, very hard to build the individual in the finance side, and vice versa. So someone that appreciates working with a star team, communicates open communication, transparency, and really have a clear idea where they want to go. Because the more open they are about it, then we can start to structure the 90-day plan, 12-month plan, 5-year plan. So with accounting, our pop business, we think of it in a few layers. The base layer being structuring, bookkeeping, and tax compliance. That's the essential. That's what everyone wants to pay, that everyone needs and has to pay for. Then it's going to be the next layer of tax advice, planning, budgeting, forecasting. That's the next layer that helps you achieve the goals that you're trying to get to. And then external syndicate work after that.
So the cream on the top of I was going to say as well, so the compliance part is really, like you just said as well, it just has to be on. How do you, well, we talked about a bit about it before, but how do you actually track that through the clients? I know you said you do the quarterly meeting with it. When you actually look at all the other bits and pieces around the structures, maybe stuff like understanding the cap table and hygiene and stuff like that, do you go through that stuff with them as well?
Well, in some respects, when the structuring conversation does come up, we do the basics of downloading the asset extract, figuring out what the cap table looks like, seeing if it needs to be cleaned up at all. But apart from that, not too much on, I guess you're alluding to a platform like Emanda.
Oh, it's just, but ours is still lazy mode. When I say lazy mode, I've got to stop calling it lazy mode. It was the cheat mode, lazy mode, stop saying these things, which is more of the whole, whenever you've got any of those documents, just chuck it in, grab it. That's one thing, right? That's awesome. It's keeping it all there in your corporate compliance. The other one is actually being driven. I know it sounds really bad. One of the conversations we've always had in the past with accountants for business is I will always go back at some point with an email saying, I'll say, hey, I've noticed something, but then I'll come back and go, oh, that's true. No, like, hey, heads up, I don't want to be the one telling you I found something.
Your accountant
should be the other way around.
100%.
I want you to tell me off.
Totally makes sense. And the way that we keep track of everything is obviously the checklists and the platforms like Xero and FYI to manage the workflow. FYI is like a workflow management. Okay. So BAS, company return comes up for the client, feed in deadlines, background, context, documentation, and then email threads. So that's the platform we use to manage on-time workflows. Okay. But of course, a data repository for containing all the asset forms and documents and history, just held within the SharePoint that we have.
You have SharePoint for you, okay, so for your client.
So the essentials, KYC, and all that stuff, we keep that on track on file, but there's always different platforms that make it easier to sift through all the information and find things easier.
Oh, absolutely. Sorry, and a lot of the times, again, people don't. I know it sounds really bad. People don't. This is what we get, and sorry for swearing, you just get people to come to us and go, I don't give a shit. And then it's followed by, until I have to, right? That's the part.
You have to.
And it often, unfortunately, is when they get to the part where it's like, oh, then I have to. So I don't know where those are. Welcome to the world of stat decks. It's crazy.
Where's the minutes held?
I guess even in the early stage when you see a client and you look at their books, what's up with things where you look at it and just go, I wish I could just go out there and tell everybody, please do this. And there's some of those tidbits that you just know in every organization, every company you see. For me, I'll just give away the idea of what I'm talking about is cash flow. People go, use cash in the bank. Like, it's really important whether you use that tool for it. Spreadsheets, we still rely on spreadsheets and systems. Cash flow is so important that actually watching, not the profit and loss, but the actual capacity, when will it drop? And we've seen so many companies doing it well where they get to this, I've got this intense thing that shows exactly when the thing's going to drop. That's actually quite important. That goes, there's got to be a hole there. You accrue, a lot of things fall off that. So I think if you don't have some complex view of your cash flow, you probably need to do better.
Yes, I 100% agree, and can't emphasize that enough. Cash is king, and really having a strong forecasting tool and budgeting tool to make sure that when a drop is due, you have the resources ready to deploy to keep the business running smoothly. Big thing is lazy cash. Maybe there's cash just sitting in the CBA accounts earning zero. There are so many different products available now where it's just as liquid, but you're at least earning 3.33%. So on 100K sitting in the bank, earning another 3,000 per annum, that can move the needle for a lot of businesses. So making sure that cash isn't just being lazily managed is super important.
Where can you put that, mate?
So we work very closely with Airwallex, and great product. They have virtual cards for employees, so you can keep track of expense tracking. Helps your accountant as well. High yield account, so that 3.33%. But also, this really is useful for companies that have subscriptions based in the US, Slack, Google, Meta. So every month you're being charged that foreign transaction fee, but also international transaction fee. So it's Forex fee and the international transaction fee. And because it's done every month, you're getting stung twice. Whereas if you use a product like Airwallex, you can have a local denominated bank account. So instead of it doing the Forex every month, it's just you transfer from AUD, lump sum,
whatever period of time.
Exactly. So sharp rates, and you're not getting clipped twice every time. Building a reserve of 3 to 6 months is usually the appropriate amount of cash you should have. 3 to 6 months of OPEX. So if you're spending 100 grand in operating expenses each month, having a cash buffer between 300 to 600,000 is going to keep you mostly out of harm's way.
Working capital. I think a lot of people get that. And look, at the earlier days, you do, I'll say it, people will have to fly by the seat of their pants, especially if they're bootstrapped. They're like, it is what it is. They try to get their way through. I've got the bucket there. It's funny because we do see that in the exit as well, is that you do get to a position where they're looking at going, hey, we need to take into account it. They don't, a lot of people just don't know it's a thing. So we actually have to look at that cash position because we need to look at what the company requires and that's coming out of your pocket to continue to prop the company up.
And how do you navigate those conversations with your clients?
Is it a way to set up
with cash, saying their position isn't that strong, and investors, you're probably advising them what the investors are looking at.
I think size is a big thing. So depending on in a smaller company, that actually is quite critical. So people look at it as well and understand what they've got there in terms of that maintainable cash flow piece and all the rest of it. And that it can make or break deals. So we give advice to be as healthy as they can there. But often as well, when it gets to an exit, even some of the bigger ones, when they start talking about that cash position, they're like, so how does it affect me? And so there's always a calculation done at the end. And that calculation is done to basically look at that net movement and go, sorry, but then we need to have this much cash in the business. And then they go, so what? They take that from me. Well, technically from the sale of the business, yes, because they need to keep that in the company to keep it running. I don't need to have that in a company. What they need to go, how you run and how they run is very different. Yeah.
And better to have that conversation early. And it's hard to have that conversation if they don't have all the data in one place to have those discussions.
A lot of the time, so a lot of the times we see that one of the most common spreadsheets, I think, that we end up, before we have a platform, we end up building was actually going through and actually understanding that cash position, because the accountants come back and go, hey, we can see this, we can see the profit and loss. Thank you for the extracted P&L. That's great. They can see this. Can you explain the flow of your company, what's coming in when, the actual pipe, how that drops, the conversion? Really what they're looking at is, can it actually sustain itself? They're looking at that sustenance. So it's one of the first things we end up having to build that they just don't build because I don't know, just run it.
Fascinating.
Tip, one last one. I wanted to understand the very special tip that we can leave with everyone watching today.
Well, businesses evolve all the time, and a lot of people talk about when's the right time to structure or restructure. Because back to that one example where you've been running the business successfully for a few years, it's now profitable, but you're still the sole shareholder, sole director. Really understanding the timing that it's important to time it. As the business value changes, if you do try to move around the shares from you personally to say family trust, there's going to be a CGT, capital gains tax event. As if the business is going to continue growing, the valuation is only going to keep going up. And that means the capital gains is only going to go up for yourself.
The restructure gets more and more expensive.
And of course, the restructure becomes more expensive personally for you. At 190K taxable income for you personally, now you're at the 47% taxable, 47 tax bracket. So almost half is going to the taxpayer, unfortunately.
So the earlier you get in there, when you see it coming.
And working with the right data and platforms to really find the right valuation, because you don't want to be overpaying yourself for that valuation.
Absolutely.
So I think the biggest piece to take away is timing, talking to an advisor as soon as possible if you were thinking about that restructure, because then they can point you in the right direction.
I think as soon as that's great, and I think the trigger for that, which I reckon is the case, that someone will turn around and go, oh, it's like trust. And I see so many businesses that go, what's trust? Honestly, we get like, it's like, what? And then all of a sudden they're like, what's this thing? So
there's some nightmares where a trust does get set up, but their account hasn't transferred over the shares.
Right.
So they've just set up this trust sitting there for nothing. And so just make sure that the job is finished from start to finish. I appreciate the chat today.
Thanks so much. It's been really good, Sid. And thanks for joining us for the fireside chat. I think it's been great. I'd love to say for people it looks really quite warm, but it's not. But anyway, we'll let the aesthetics do their piece. Thanks so much again.